SMCI, that super microcomputer, NASDAQ, SMCI, was once a blazing rocket in the AI infrastructure universe. Over the past 5 years its stock price leaped by over 1,000%, a launch worthy of a space shuttle ride. But if that thrill ride is the first act, the last year has felt more like cruising at constant altitude. In fact, SMCI has gone almost flat in the past year. This sudden chill at the peak of its journey is exactly what analysts point to when they talk about the cooling off of the AI server hype. It's as if the AI party is winding down, the club lights are dimming, the DJ's slowing the beat, and our server builder DJ, that's SMCI, is taking a breather on the decks. The 5-year sprint, from startup to superhero. Imagine SMCI as an underdog high school kid who started a lemonade stand. 5 years ago it was a small garage operation, but today it's selling every pitcher of lemonade for AI parties. In industry terms, SMCI built a rep for assembling high-powered server rigs faster than you can say, NVIDIA GPU. This frenzy coincided with the AI boom. Companies like Microsoft and Google, thirsty for AI computing power, kept ordering more and more of SMCI's custom servers. The result? The stock soared, up over 1,000% in 5 years. As one motley fool analyst quipped, SMCI's growth has been nothing short of meteoric. Think of it like a tiny rocket that suddenly lit all its afterburners and shot into orbit. By 2025, investors were salivating. SMCI went from the size of a lemonade stand to playing with the big league servers. Its revenue jumped from about $5 billion in 2021 to more than $22 billion in fiscal 2024. Each quarter, financials looked like fireworks. Analysts were handing out buy recommendations like party favors, dreaming of where this wild ride would stop. Last year, the AI party takes a breather. But every party has a lull, and the AI infrastructure bash was no different. In the last year, SMCI's stock is basically treading water. After all those quadruple-digit gains, it's now as if someone turned off the flashy strobe lights. Why? Part of it is market math. After 5 years of stunning rises, flat might actually feel normal. But more importantly, analysts see signs that everyone is pausing. Even giants like Microsoft and Amazon, who had been buying server racks like kids in a candy store, have eased off on data center spending. One report notes that tech titans scaled back data center spending, citing overinvestment in AI infrastructure. It's the classic eating too much ice cream problem. After hyping up AI hardware for so long, companies realized maybe they overordered. Inventory piled up. Budgets hit pause. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. In plain English, building fancy AI server farms is expensive, and not every company wants to be $SMCI's best friend right now. It's like the AI craze was a huge yoga class stretching everyone's muscles, and now we're all in Savasana, just resting. SMCI, as a server builder, feels that chill. One motley fool headline even says SMCI's situation is emblematic of the current slowdown in enthusiasm around the AI infrastructure boom. It's a fitting metaphor: after a sprint comes a walk, and after a walk, maybe a nap. Q4 2025 snapshot, gains, and pains. The story crystallized in SMCI's recent Q4 earnings, the 3 months ending in June 2025. The big numbers came out last month, and they were a mixed bag. On the bright side, revenue was $5.8 billion, which is up about 7.4% year-over-year, and roughly 8% by some counts. That sounds healthy compared to most tech companies in 2025, but remember, SMCI has been used to triple-digit growth during the AI boom. So 7 to 8% is basically a slow jog after a marathon. The motley fool notes it's a big slowdown from its recent blistering growth. In other words, SMCI's rocket is coasting. What about the profits? Here's where the math gets interesting. Net income fell from $297 million to $195 million compared to the year-ago quarter. That's almost a one-third drop. It's like opening your cash register and finding that a chunk of your earnings got lost under the mat. Analysts pointed out a few culprits: rising costs, tariffs on Chinese imports were mentioned, and competitive pricing. In fact, Reuters reported that SMCI's adjusted EPS was just 41 cents, missing the 44-cent street expectation. One insider colorfully blamed it on tariff impact. Imagine planning a party budget, then suddenly the venue doubles the price at the door. Ouch. And the guidance? Well, management told investors to expect $6 to $7 billion in revenue in Q1, September quarter. Even at $6 billion, that's essentially flat year-over-year. So not only is growth slower, they don't see a big surge coming next quarter unless they catch a lucky break. It's like they fired up the engines for this year but have their foot only lightly on the pedal. Understandably, when these mixed results hit the tape, SMCI's stock got queasy, dropping sharply shortly after the announcement. Profits and margins, the squeeze. Let's talk margins, the crucial readout for any hardware assembler. SMCI doesn't make chips or fancy hardware itself, it assembles components and ships them. That means its profit margins are slim. Imagine a thin crust pizza compared to the deep dish profit of Nvidia or AWS. And flat growth makes that pizza even thinner. The financials reflected this pressure. Gross margin fell to around 9 to 10%, down from near 17% a couple years ago in a similar quarter, a substantial slide. In real terms, that means for each dollar SMCI earns in revenue, it keeps only a penny or two as profit above costs. So even though sales ticked up, the profit pie got smaller. As a creative aside, picture SMCI's financials as a lemonade stand. In 2022, it was selling lemonade for premium price, say $5 a cup with cost $3, making $2 profit per cup. Now, imagine it has tons of lemons, so it starts selling at $4, maybe Dell and HP are offering cheaper lemonade. Its costs have risen, $3.50 per cup due to tariffs and complex assembly. It sells more or about the same quantity, but now it only keeps 50 cents profit per cup. Even if revenue rises from $100 to $107, that 7% bump, profit might drop from $20 to $15. That's similar to SMCI's situation: rising costs and competitive pricing cut into earnings. The quarter's actual net took the hit, net income down to $195 million from $297 million last year. So the stand is selling more cups, but making less profit on each. Analyst chatter noted this grim math. One Motley Fool summary said SMCI now has slim gross margins, below 10%, so if the data center spending market turns the wrong way, profits could quickly head south. In plain speak, SMCI's in the fine china shop of the hardware world. One wrong move and glass breaks. The downturn in profits is a warning sign that we're likely seeing the peak of margins from the hype era, not the start of a new upswing. Note this as well. Do you want a life of peace? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.